All right. Welcome, everybody, back to our usual closing bell Wednesday show on YouTube. If you guys are here watching, go ahead and say hi in the chat for me so I know you're here. It's hard to tell on YouTube. It doesn't tell me exactly who's in the chat, but go ahead and say hi. I know it's been a get Max in here. What's up, Jenny? Max in here. But yeah, markets, since Thanksgiving, kind of chopping around. My thesis right now is that we're waiting on the December 10th rate cuts. So I think we're just going to create a little range that we're in right now. Might dip down as much as 670. If we do break above this 685 right now, I think we could head up toward about 690 or so. I don't think we're going to break it just yet. There's been a little bit of conversation of how we might be seeing a 50 point cut, but that's still yet to be seen. We got to let a couple more economic numbers come out before that could be the case. All right, this week, what we got going on. We do have a couple of earnings coming up. Salesforce, we got Snowflake. Those are the two bigger ones. C3 AI, UiPath. We got Five Below. But I think those first two, maybe first three, are probably what most people are concerned about. So we'll take a look over at those in a moment and discuss what's going on with them. In terms of STAX, what we got going on, I did notice just as not even an hour ago, had a big block of QQQ puts coming in. There is a little bit of fear that, so the main thing that's been happening, especially these last 2 weeks, is NVIDIA's hold on their chips and on the AI space is starting to not necessarily lose their grip, but there's a lot more competition in the space at this point. And what you can understand is that that monopoly that they originally have on their chips is starting to, divert to a lot of these other companies. The other big, Mag 7 companies are all developing their own AI chips to handle a part of that workload. So, people are no longer required to just use NVIDIA's chips. Now we do have this possibility that some of that attention will be diverted over to the other companies. So for example, we heard about Meta getting involved, where they were going to purchase chips. Google is developing their chips. Amazon is now in the space. Apple is also, they just fired their head of AI, but they have a deal with Intel to produce chips for them as well. So you can understand that there's a lot more, it's no longer so one-sided that everybody was rushing and, in line to get those NVIDIA chips. Now we have a lot of other options. You got to also keep in mind too, China is also in this race, and they are in, developing their own chips to offer additional alternatives. We saw SPY run up pretty decently today. We do see puts being sold off pretty consistently, and then calls hit a little peak here. They've come back right down underneath zero, so not anymore. We don't necessarily have a clear direction as to what's going on right now. I do believe that we are awaiting additional economic numbers to see, and that will give us a better direction, because if we do start to have hints of a 50 basis point cut, markets probably will pump a little bit on that. But we also have to keep in mind that cutting 50 basis points very likely is going to lead into additional inflation, and we also would, essentially we're cutting for the wrong reasons. So that's not necessarily a great thing at the end of the day. We peek over at our flow scanner for today. A lot of Tesla calls coming in. All right, Tesla calls 51 mil to the 3 mil of puts. QQQ, IWM, SPY, all slightly bearish, but again, 20 mil, 12 mil, 8 mil, nothing major in terms of that for today. Again, it is December 3rd, so ultimately, people are kind of slowing down for the holidays, and we'll start to see once we get more of that economic data. Meta, more bearish than bullish right here. Set up. Got Max joining us here. Got Google, more bearish than bullish. Nvidia. So again, not a ton of flow coming in that necessarily dictates the direction. We got Palantir definitely leaning more bullish than bearish here. And K-Web. I did see a little bit more of the Chinese names looking like they might be expecting some sort of pop in the next few months here. Let's see. MicroStrategy still struggling, but there is a good possibility that Bitcoin and MicroStrategy have, created a temporary bottom. I do think that the buyers are starting to sell in, the sellers are starting to get exhausted. MicroStrategy is down heavy over the course of the last few months, and so there could be a solid bounce for where it's at this point. But as we go further down, one thing I like to do here is go filter to see where there's zero puts to calls. So K-Web, Robinhood, gold's still getting low. But again, 1.8 mil for gold. That's kind of minor compared to what we've seen in the last few months. RGTI, XLV, CAT, KView, AVGO, TSM, etc. Now, I've had some people ask me about, the AI trade. Is it a bubble or is it going to pop, etc.? I mean, all that speculation, what I would basically focus on here is that while the big tech companies will continue to spend money and continue to increase their capex, that's where a lot of it is focused upon, is as long as these companies continue to pour more money into this AI trade, we should continue to see, stocks continue to go up. Now, the one thing I would point out is think about where, if there's a gold rush, where do you want to put your money? You want to go find the people that are selling the shovels, right? The people that are selling the shovels are the ones that are going to make the most money. And who are the shovels in this AI trade? You got to think about the people along that supply chain, all right? The people that are supplying the materials that are essential for the chips. You want to understand that the people that are producing the chips, they're going to get the most amount of money, all right? So while the Nvidia trade, you can understand the big Mag 7, they might be creating a temporary top or might chop around for a little bit until the stimulus starts to hit. Once we start money printing, they'll probably continue to go up. But Broadcom, AVGO, TSM, those are two of the bigger names that actually have a very strong footing within that chain of chips being produced. I would also say Intel is getting mixed up in it, but I will talk to you in a moment and show you the charts and some of the statistics on Intel that make it a much more riskier trade than you would necessarily want to get into. Even though it is being backed by the government, by the US government, there's some things in terms of it that are just completely irrational at this point. The last time I looked at the PE ratio for Intel, it's almost 4,000. So that's kind of ridiculous to consider at this point. Also, we got Max over here. Good to have you here, dude. Haven't seen your face in a while. I know you've been doing your streams on Twitch. But every Wednesday we like to reconvene in here and try to get some conversation going and see, I've always loved to have you on here because ultimately you've got some insights into what's going on that, again, have a little bit more technical and a little bit more focused in terms of what's going on. So how's everything going with you, dude?
Good. So funny that you mentioned that about Intel, because I took some profit on my Rigetti and IBM shares, and I deployed $5,000 into my Robinhood account. So I'm going to be doing like a 5K. Let's see what we turn it into by the end of the year type of challenge on our stream every day. And we have everybody from the Trades and Gains community, Keone Mars and Los, to printing tendies and Denali Trades and a bunch of other people who are going to chip in with like, because it's a community fund basically. So I'm not taking trades unless like we all kind of agree on it as a majority, right? Because I just want to make it fun and I want to like show that I have real skin in the game versus like, hey, I'm gonna buy this spy call, but not really. So I thought this would just be a fun thing to do. And one of the first positions I took was actually the Intel STAX print. And I will say one thing about Intel that has kind of switched is because that portion of their business that loses them money isn't necessarily being fixed. This Apple partnership is going to kind of help distract people in a sense, because essentially Intel, how they used to make, like when you would get an Intel chip computer from Apple, right? It was usually on the lower end. It wasn't like their top tier. So now what Apple does is they cycle out their M architecture like every 2 cycles. So I think like they stopped supporting M1 when they released the M3. They're going to stop supporting M2 once they release the M5. But Intel's going to make the lower tiers of those M architecture chips, because I think Apple's going to try to move into the cheap laptop space again. But Intel will be that like core component piece that it's going to be built around, but they're going to build it as Apple's M architecture versus an Intel i9 or whatever they're shilling out now. So that's the only reason why I thought it was a good position to take, is because the reason we saw the surge was off of that news when Apple announced that. And then now it's just a matter of the bigger, because right now $55 to $50 to $60 calls are what are being bought, with the shortest expiration I'm seeing is January 16th, and the longest expiration I'm seeing is 3/20, March 20th, 2026 is which we are in. So I think we get a huge announcement in Q4 coming from these guys, and it's going to have something to do with Intel. And I'm not expecting like a Google type move with these contracts, where when we got into Google, I was like, these are going to $50, and they went to $50. These are, I think maybe we cap out at like 10, $12 per contract here, and then kind of call it a day, especially going into holiday season. And especially with earnings season coming around that time as well. So I think there's a lot of good catalysts. There's a lot of good money flowing into these contracts for similar strike prices as well. And also, I feel like tech is going through what it went through with AI with quantum computing now. So we already had our first partnership announcement, which was IBM and Cisco Systems. They will be partnering to put out the first like enterprise grade quantum computer, essentially. So I'm looking out for that. So I think we're very much in that same kind of like hockey stick phase that AI was going through after predictive analytics kind of converted into AI. Now it's quantum computers that can power AI models to bring AGI to reality, basically.
Yeah, agreed. The initial AI trade has already gone through a big part of the market cycle. We also are we also have seen the first part of the quantum pump and dump has already happened. But I think it's just getting set up for a second cycle pretty soon. And another part that you can consider is that robotics is going to start to get a whole lot more attention in the upcoming 1 to 2 years. So keep an eye out for those as well. The thing that's really interesting about this Intel trade here, especially what you see here on STAX, is that it's already December. So the January calls, these ones obviously for this week, but they're aiming for $55 in the course of about a month and a half or so. And it's trading at 43, 44 right now. So again, I made this prediction about 2 to 3 weeks ago where I said I'm still seeing some strong Intel flow. This was before the Apple announcement, the partnership that they had with Apple. And something's going to happen. There's going to be another partnership announcement. There's going to be something that pushes it up higher because again, they were aiming for the $30 to $40 strikes. Now they're aiming for 50 and 55. So Intel's trade isn't quite over yet. There is, some juice to be squeezed here, but I would just be careful with it because at the end of the day, it is something where you're going to want to take those profits out of it pretty quickly. The overall valuation for Intel still doesn't exactly make sense just because at the end of the day, their revenue and, I expect that when their next earnings call comes up, and the report comes out, there's going to be some major red flags in that report that could potentially lead to a little bit of a sell-off. But if they are continuing to make these partnership announcements, we could definitely still see this pump up well above $50, and you'll probably start to see puts being taken out on it at that point. That would probably lead it to come back down just a bit. But if you take a look at my chart here, basically had called this out saying we're going to chop around here for a little bit. Once we break up, what this big white box up here was, there used to be a gap from previous trades back in April of 2024. All right. So that gap is now filled. Now we're at the top of it. Do we break up above it and start heading up to 45, 46? There's still some points of resistance, and then up toward 50, 51. But keep in mind, STAX and those contracts that we see give the time frame of this just under a month and a half for it to hit those levels. So I'm expecting that there's some sort of additional announcement coming in the next few weeks, probably before Christmas, is my expectation for Intel. But yeah, it's again, like we were talking about Intel back when it was in the $20 range and so, and made some good money off of it so far, and it's still continuing up. I just want to make sure that I point out here this price to earnings ratio. Man, this is the biggest one I've seen so far. 3,774 PE ratio for Intel at this point. So, for those of you that are unfamiliar with what PE ratio means, the price that it's trading at, this $43.75, let's say where it's at, it would take 3,774 years of Intel's revenue and their earnings to match the price at which it is trading at. Okay, so what that really means is it's, Intel at this point needs to figure out how they're going to fix that revenue. And if that does happen, this does not become such a ridiculous number. But we have to also keep in mind too, I've been hearing a lot of podcasts and other people who, stock analysts and things like that. Today's market no longer views these statistics the same way they did as before. So, obviously we can use Warren Buffett as an example. He's done a great job managing that portfolio for Berkshire. However, his metrics and the things that he used to value companies and evaluate them in the past, a lot of that has not necessarily gone out the window, but a lot of it can be ignored for an extensive period of time. And the price of a stock no longer needs to necessarily match those metrics if there's a lot of speculation as to what direction a stock could go. And one of the big examples is, for example, Tesla. Tesla has had some extreme valuations as time has gone on, and a lot of times seems overvalued, but you have to think of it as like who is it overvalued to? Because some investors are still going to look at it and say, well, in the future, if they continue to produce, they continue to get better and continue to manufacture more and more, those PE ratios will eventually drop back down, and it'll seem like a steal at that price at that point. So keep that in mind. All right. But yeah, that 3,000 PE ratio is ridiculous. I thought seeing Nvidia in like the 3 to 400 was crazy, and Palantir up in like 5 or 600 was nuts. But now we got the PE ratio of Intel at 3,700. All right. What podcasts do I like to listen to? I really like the All In podcast. It's got a couple. It's got what Shamath Palapatia. It's got David Sachs. A couple of other, pretty well-known investors, and they they converse all the time about things, about what's going on and stuff like that. Another one on YouTube that I enjoy is the Stock Guy, just a dude with a whiteboard trying to explain stuff. He's actually had a lot of great things to say and a lot of good, just not just opinions but analysis as to what's going on. And then, yeah, I mean, just my goal here, like I've always understood, I'm not the smartest guy in the room, so I like to make sure that I find additional opinions and try to find out what other people are saying, what other people are thinking about. Because again, I'm not always going to be the expert on the industry or things like that. I got to go find people that have more knowledge and more experience than me. All right, we got a couple minutes. Let's go over these really quick. We got Salesforce coming up today. And Salesforce has been in this little bit of a channel. It broke out of it to the upside, but it's come right back down. So there's kind of this little bit of like a bear flag look to it, but it's come right back up into it. Earnings are coming up. PE ratio at what, 33. Quarterly net margin headed on up. So I mean, they're doing a little bit better than before. They did earlier in this year, and so went through a bit of like restructuring. I know they've laid off people as well. The thing that I would say that most concerns me about this look on the chart is the fact that you do have this large head and shoulders formation. Let's actually drop this a little bit further. So you got this head and shoulders formation that realistically, if it was to continue breaking down, we could see this drop pretty far. Okay. But overall, if you take a look down here at the earnings, it's all a bunch of greens. You got this one miss at the end of last year. Okay, December last year was one of their only misses when you take a look at this. So, CRM, Salesforce. Let's take a look over at STAX real quick and see what STAX has to say in terms of the flow. While I do that, you got anything to say about Salesforce?
Yeah, I think just look out for any more AI. I don't even know if you can call them partnerships, ventures, because like they don't even like partner with people. They're just like, hey, how much will it cost for us to fund the entire thing? And we'll just dip into our already existing profitable businesses. And that's the difficult thing is they're like a profitable company who's not profitable.
Yeah.
Because anytime they make money, they're like, okay, we made money. Where do we put it now? Versus like, oh, let's like maybe pay some people and like invest in infrastructure. Instead, it's like, oh, who can we give it a obscene amount of money to? Because that's their biggest concern every earnings call is with Salesforce, it's how profitable are these AI ventures that you're continuing to dump money into blindly? Because you can only do that for so long. And as Eric mentioned, AI has gone through its like show me phase, and now it's, or not show me, but like hype stage, and now it's in the show me stage. So it's not enough to just say like, oh, we're partnering with this or we're doing this and there's AI involved. People don't care. People want something, want a narrative, they want a meta, they want a GameStop type narrative to bet into if they're going into AI. Like people thought the whole SoftBank pulling out of Nvidia was them showing that there was an AI bubble. No, SoftBank wants to go gamble their profits from Nvidia into other AI companies that aren't making money yet. They're trying to find the next WeWork basically and hope it doesn't become WeWork. Because that is the one thing that if you're not familiar with investing, you probably know SoftBank from. So I think like CRM is very much in that same bubble. They're kind of like the SoftBank of SaaS companies where it's like people don't really respect them, but they connect to everything. So you kind of have to, because like they have a partnership with anything and everything that you're probably going to use. So it becomes this like necessary evil that you may not want to have to buy into, but you have to. So I would definitely be on the lookout for any partnership announcements, any movement of like money, anything like that is going to be the big signal. They're definitely a conference company type of call, unless their numbers come in extremely flat. But from my understanding, they don't have very aggressive like earnings numbers ever put out for them, really, for how big of a market cap that they own.
Yeah, and STAX also, I mean, this one for Friday, right? This is a very high risk, 600K on this one. Just aim for 245. That's only a 3% move to the upside. And it's also kind of capped at 260. You got people selling calls for Friday at 260. That's about what, 9% up there. So what, expecting anywhere between 3 to 9% is kind of what this is saying. This one even capping it at 252, saying it's not necessarily going to go above that. So, you know, Wave X over here is also looking more bullish at this point, especially as we go into market close. But I would say this, I don't expect sales like Max said, I don't expect it to be a huge mover. Maybe we'll see 4 or 5% is kind of what I'm thinking here. But
It's
to the
definitely going to be
upside,
a post. If you're going to play Salesforce, I would just play it tomorrow, because that's when you'll see an actual move. Because then you'll see people either start to pour capital in or pull capital out and rotate into others. So I definitely, this is one of those ones where you pay attention to it because you want to play it tomorrow at open, because it'll make a clear direction at that point, because today could end up just being we're going to burn both sides of the candle and screw shorts and longs.
you know, we've definitely seen plenty of those. So, I mean, with this coming down here, yeah, I think breaking above 245, I think maybe we tap on to like maybe 250 or so. And then tomorrow maybe sell off a little bit and maybe the bigger move will come afterwards. So, if they are able to give some good, yeah, if you're going to see, you know, if you're going to see the move, I think it's going to come a little bit after that. The other one that we have, the other big one is snow. I've had this charted on my trading view for a while. It's in an accumulation phase. It does not have to make this move today with earnings, but earnings could be the catalyst that pushes it up past 280. So if this is, you know, they're a strong company at this point, and I think that if they are able to show strong positive earnings, we also do have, you know, more bullish than bearish, especially as we go into market close right now. So not too much. You got some, you know, they're selling some calls for 300 for later this week. So I don't think he'll necessarily break up above that, but, you know, probably head up toward 300 and maybe bounce off of that. So, you know, a 290 or 280 call for this Friday. I mean, you got to keep in mind, especially when it's a Wednesday earnings call, very, very tough, because, again, if it does not go past your strike, you very quickly lose out on premium. C3AI, no real news. Oops, sorry. No real news right now about it, or no new flow, but it is looking more bullish than bearish. You got a lot of calls coming in, but only 600K for something like that.
I mean, I'll be honest, those contracts are pretty cheap though.
Yeah.
I've made like some easy money on C3AI just playing into news and metas and narratives and retail meta. So I wouldn't put it past him, but I would say 600K would be a sizable amount for something like that, because I don't think I've ever bought a contract that was more than like $15.
And another thing I want to point out is when you head into earnings, you also kind of want to see did we run up to earnings? And in this case with C3i, we've rammed down the entire way. So you know it's kind of at a bit of support. You have buyers right below as well. So definitely more toward the upside, if anything, at this point.
Salesforce just blasted off, by the way.
Look right here.
But it was the first, that candle's vicious. 228 on the bottom and 259 on the top.
Snow starting to move a little bit.
But I think they missed on everything. EPS came in at 722.
Well, market likes it so far. But I will say, like yesterday, we were watching earnings, and what was it? Yesterday it went up and then down and then back up again. It was all over the place. Was it yesterday? I think CrowdStrike or Marvel did that in both directions. C3 AI headed up at this point. Let's look at path. Path up and back down. So nothing too crazy to consider just yet. Path is basically flat right now. Yeah, Salesforce now almost at 260, up 8%, still under that 9% that we said at first. Snow's only up 1.5%, so nothing huge so far. C3 AI up 1.5%. It's basically flat. Path is dropping. Path is down 1.5% now. Yeah, Marvel moved a ton yesterday too, back and forth.
Salesforce just touched 260. Above 260.
It came right back down now.
I know it's fighting for its life. Dang it, touched 261. I'm interested to hear what they're gonna say on their conference call, though. They have like one of the most underrated CapExes in this whole sector. And that's like the one thing that just concerns me about them as a company. They'd spend so much money. Oh, heading back up. 260.47. I don't know. I care about end of year, baby. That's when the real games begin, because you got to show what you've been doing all 2025 at that point. And you got to have strong numbers going into 2026, because that's, if you're going to make any revisions, that's the time to do it. So you're going to see those violent swings.
Path has not reported just yet. Same with Snowflake. Snowflake actually hasn't reported yet. We still might see a huge move here. But yeah, Salesforce reported. It looks like they raised annual revenue forecast, operating cash flow. Oh, C3 AI just blasted off. Up 5% now. Snowflake dropped.
Ooh.
Snowflake dropped 3%, 4% now, 3%. Oh, it's coming back.
Oh wow, C3 with a nice move.
It just got cut in half though.
I know.
Now back down to 2.5. That's the thing with earnings calls here, guys.
Especially these small cap companies that do earnings.
I mean, it already moved 4% earlier, to now it's negative. Now it dropped down 1%. Snowflake's now down to 250. I will say Snowflake, if it does drop pretty low tomorrow, I would actually say it would be a buy for the long run.
Yeah.
I still have faith that they are in accumulation, and this could be a push to a last point of supply for it to move up higher.
I could see like 246 and bottom target. We're looking at like 232.
I've got a resistance at 237 here for Snowflake. D3 AI is just dropping now, down 3%. Salesforce is still up just slightly. Path has not really moved. Still up 1%, but they have not reported just yet.
What, they're 15?
Yeah, 10.
Okay, 10. Gotcha.
Oh.
Oh wow, Salesforce recovering basically that whole move.
I will say, especially for these, like, STAX had very limited flow for a lot of these to begin with.
Yeah, I was gonna say today, like even going into this, I looked at the flow real quick just to be like, I wonder what happened today. And I was like, what the? This was a very, like typically we see some more signals like 2 weeks out, a week out from when these earnings happen. And there was really nothing coming into the pipeline.
D3's down now. Completely down 5%. Probably should have brought my son on here to give us the baby indicator to see. He was in a good mood today though, so I don't know. He might have been wrong.
He might have brought his own market bias and
yeah. Still waiting on Path to report, but yeah, C3's dropped 5% now. Salesforce is still holding about 3.5 to 4%. Snowflake is now down 6%. By the way, the VIX today dropped below 16. SPY hit, what, 685 for a brief moment and kind of rejected off of it.
yeah.
Okay, I'll do this real quick as well. Real quick, our fear and greed index is at a 26 right now. Okay, so that just means that right now we are no longer in extreme fear. We've bounced back up from that. We are still not completely in the clear. This can still fluctuate back down if we have really bad economic numbers, things like that. On the other hand, the CME FedWatch tool shows, and let me refresh this. This was earlier today. 89% chance that we are cutting rates next meeting. Okay, I've been hearing some hints about potentially cutting 50 basis points, but personally, I think that's the wrong move to make, regardless of what numbers we do end up getting. That is very much just the next Fed chair to be appointed is somebody known for very easy monetary policy. And so he's going to aim, it's pretty much a lock at this point. There are some videos of President Trump being asked about who the next Fed chair is, and whenever this guy's name was being mentioned, the president was like smiling and kind of giving a grin. He definitely wants Powell out of power at this point because Powell's been holding rates a bit higher than he would have wanted. But if we do see easy monetary policy, meaning that rates go down, money printer gets turned back on, we all understand what that basically means is we lead ourselves into extreme inflation. We lead ourselves into, while rates are low, it does, more money does flow. It's going to help the unemployment rate. Unemployment rate should be dropping. But on the flip side of it is we do see inflation come back to kick us in the butt. All right. The real winners at the end of the day are the asset owners, the people who have, the houses, the stocks, and own assets that appreciate in those types of events. Okay, so keep that in mind. That's kind of where we're at this point. I was also saying history kind of shows that this is the expected course that we are to take, meaning that history has always shown there's always an empire that is extremely strong, but in terms of their monetary system starts to devalue their own currency. When they devalue their currency, it does prop up that empire. It creates inflation. They start outsourcing a lot of their work to other countries, which empower the other countries that start doing the manufacturing and start creating for them. You can understand for us, the US has outsourced everything to China for so many years at this point. China's grown and grown quite a bit because of it. Then the US at this point, or any empire, starts to devalue their currency by continuing to print money to support their overspending or their the debt that they've created. And it's kind of funny because we are at that point where the only way out for the US right now is really to print more money, and that's what we're headed toward. Sometime next year. My prediction is sometime between January and March or April, some sort of larger event may happen which gives us the excuse to print money. It could be war, it could be a pandemic style type of thing, it could another sort of lockdown, or it could be some sort of black swan event that causes asset prices to pull back heavily. And as a result, they're going to use that as an excuse to turn the money printers on to save everything. It could even be something like bank failures and bad loans that were taken that needed to be saved. This too big to fail type of thing. So, again, you and I are, I've always said this, you and I are spectators in this. We're not going to go and change the course of action that's about to be taken. This is already planned at the end of the day. Another interesting theory that a lot of people have is that we will move ourselves into central bank digital currencies, so CBDCs, using cryptocurrency as a way to transfer the debt of our dollar into these into crypto, and using certain ways to decrease the amount that we technically owe. Now, I'm not an expert on how that's supposed to work. There's a lot of videos online talking about how this is already the course of action that is planned. But it's just interesting to see because we already took ourselves off the gold standard, and the next step in order to, we've put ourselves another couple $1 trillion in debt in the course of this year, since the president came into power, and we're what, 38 billion or 38 trillion dollars in debt now, right? So, every year we pay over $1 trillion in interest to that, so that's only going to get worse. And it's funny because what are we going to do? We're going to try to lower interest rates to try to curb that a little bit, but again, the US dollar has lost a lot of value this year. A lot of times, a lot of it has to do with the fact that people are starting to lose a little bit of faith in how our system. Okay, so just I can't predict what's exactly going to happen, but at the end of the day, there is a lot of concerns of what direction things are going. Back to the charts. Path reported. Looks like numbers are good. Path is now up about 10% toward the upside. So now at about 16 and a half. Snow is consolidating down about 5%. T3 AI is pretty much flat after hours, and Salesforce is still sitting around that 4%. I'm expecting that their conference call and earnings call is going to give them a little bit more of a boost to the upside, probably. As always, if you guys are still here, go ahead, hit that like button for us. We've actually been doing pretty well on YouTube. Max's shorts that he posts every day are getting quite a few views. And we are getting very close to hitting 5,000 subscribers. So if you're watching and you're still not subscribed, please go do so. Hit that notification bell as well. So when we do go live, you got that push notification to your phone or to your tablet, your computer, so that you know that we're headed up and that we're gonna be on here every single Wednesday. We're here to chat about what's going on in the markets. Looking ahead, we'll have 2 more weeks of this. I'm guessing on Christmas Eve and maybe even New Year's Eve. I don't know if we will necessarily do a live stream then, but we'll let you guys know. We're still in our Discord. If you guys missed out on the Black Friday sale that we did, you can still use eRoo Love STAX for a 20% off your STAX membership. Lots going on in there, and our community has definitely expanded and grown. We've got multiple traders in there discussing, trades to take. Andy and Barack, along with Max and I, are fairly active in there in terms of on the daily, giving you guys our thoughts on things and what we see in stacks and trades to take. We also are projected in 2026. We are going to be merging additional tools from our TraderLink acquisition. Gonna merge them over into stacks. So I would urge, if you want, get into stacks, get that subscription. That way you're locked in at this point. I'm expecting that when we do have everything merged, just because the amount of data costs that we have incurred as well, there very possibly will be some sort of slight bump to the membership fees and to the subscription fees that we have. But if you are already locked in, we're not going to go and change your subscription price and things like that. Yeah, a lot of good tools. There was actually recently on Twitter, there was a bunch of fuss made about one of the companies out there started to charge $250 a week for basic gamma exposure tools. We actually, with our acquisition of TraderLink, do now have access to a lot of those. We're just in the process of merging them over to STAX. If you haven't already seen, Max has done a couple of introduction and lessons to how you can use those tools to add to your trading to get better at recognizing where the dealer and where the market maker has an interest of moving the stock price to and from. And
I'll say one thing about that. I was going to say, by the way, I have started a TraderLink master course. And basically what I'm doing is I'm going through every single module that we have on TraderLink, and I'm making a dedicated video about it. And then from that, and by the way, this is all based on your guys' participation, because from that, what I'm going to do is combine those tools and combine those modules to tell you what you need to use to achieve what trading strategy you're looking for. So if you're like, hey, I want to find really effective swing trades, you'll know exactly what you need to be looking for, in a sense, because one, you'll have an individual breakdown of each module, and two, you'll understand how you can use those modules in conjunction with each other to pretty much like trade the way that you're comfortable with, but you still have the data as validation. So I'm in terms of a schedule, I'm doing these daily. This is something I'm like fully committed to. I would be more active in the Discord and stuff like that, but as Eric knows, like I'm on camera pretty much like 16 hours a day. So as much as I would like to type stuff out, I'm more so like I'm just live and doing stuff in real time. So you can always come and catch me. And I talk things through a lot, take a lot of community questions. But yeah, the big initiative for me right now is making sure that if you guys don't want to get like scalped by heat seeker essentially, and you want something that's one going to give you a lot more resources than like the one module they're actually giving you like any type of value for. like you have a whole suite of tools you can use through TraderLink, by the way. And I can promise you, before the end of the year, you will have a breakdown video on each module and what it does, and how you can leverage it in day trading, swing trading, whatever flavor gets your palate going, right? So just keep that in mind. Eric does a great job of like consistently posting updates as well. So make sure you watch out for his stuff. Mine is a little more cumbersome. I like Eric's stuff because I even read Eric's stuff sometimes more than I read my own, because I'm like, oh wait, I can get like all this information in kind of like a paragraph versus like the 5 sections I wrote out, which are nice, but it's not always necessary. So, like, honestly, for that alone, his earnings breakdowns are so much more simplified, especially if you're getting into it and want something where you're like, okay, I kind of have a idea of what way I can swing this or where I can afford to take some risk potentially. So yeah, I like just be aware. Me and Eric are constantly doing things behind the scenes to like help you guys have as many resources, tools, tutorials, whatever you need to like deem yourself as a successful trader, because everyone's going to have a different perspective of what that actually is. So,
And everybody's got a different time schedule, right?
yep.
Some people work 9 to 5. Some people have other responsibilities that, again, you can't be sitting at a computer or necessarily even being on your phone taking these trades all the time. So finding what works for you until you can, until you've achieved that type of, you know, not just financial freedom, but time freedom to be able to trade in additional ways. If you're working 9 to 5, yeah, you might be able to do some quick scalping in the morning, but sometimes you could get stuck in a trade longer than you need to. And there's some people that are, for example, Barack does a lot of the scalping here and there. He was going to get into a quick trade, get out pretty quick. Andy, same with me. Max as well as are more so going to be the swing trades, looking
Mm-hmm.
for price action, trying to play the bigger time frames, and trying to get into positions that we can hold on to for a little bit longer. Um, Chemo is a mix of both. Chemo definitely has a couple scalps here and there, a couple quick day trades here and there, depending on the flow. But also at the end of the day, he also has a couple of longer term positions that he's going to hold on to because of his thesis. But the idea here is to figure out what works best for you. And as always, you should understand, we're as the traders in our Discord. One of the things that we've always, that I personally love about all of us is the fact that we all admit that we don't have all the knowledge in the world, that we're still learning and still trying to add to our knowledge base to get better at what we do, because the markets are constantly evolving. What may work this year or may work for the market under one presidency might not necessarily work for the next one, and you have to make sure that as a trader that you learn how to adjust that. Questions here. What's a 20% discount code? If you look in the chat box or the description box below, it's eRoo loves STAX, EROOLOVESSTAX. 20% off any of the STAX memberships that you want to get into. And then Vlad asks, is there a date for the data merge into STAX? TraderLink tools are also cool. Currently, we do not have a set date. If you're familiar with any sort of coding, what we built with STAX was pretty much a fully organic, from scratch, from nothing. What we inherited with the acquisition of TraderLink was not as streamlined as we would have liked to in terms of just plug and play into our system. So Chef is working very, very hard behind the scenes to try to figure out how we can make that transition work without breaking anything in terms of those systems. Um, we already went through and did a lot of streamlining. We've already done a lot of things to make sure things work better in terms of the code. And right now we're just, we should have projected release date for next year as we get closer and closer to the end of this year. So just be patient with us. We appreciate your guys' patience overall. It's one of those things where you know any sort of code that you have to deal with usually turns out to be more work than you might have originally expected to be, and that's kind of where we're at this point. But we are very excited that, again, this acquisition we had with TraderLink is bringing forth a lot of additional tools that we're excited to be able to share with you guys very soon. Looks like Path is now up about 13%. C3 AI is only up 1.5%. Salesforce, hey, look at that. I said it was going to go up 5% or so, and it's exactly at 5.07%. Snowflake down 7%, but I'm going to tell you this. If you have a retirement account, grab some shares of Snowflake. Or if you even want to, we can take a look as to what comes in on STAX tomorrow. If there are any leaps for 2027, 2028 for Snowflake that come in, I definitely would consider those to throw into some sort of retirement portfolio. It's a situation where I still think Snowflake is ready to pop in the next year or so. It's basically finishing up accumulation. Actually, let me pull that up here for you guys too. This is actually a very welcome drop that we have right here. We have continued last buy up. That's gonna get snatched up real quick. If it came down to 237 or even 225, that'd be a great entry for Snowflake for the long run, because it is fully set up like this. It is at the top range of this. It's just going through this sign of strength and ready to rocket up above. I believe it can go to 280 and higher if you just give it some time. And this company is still actually fairly new in terms of age, in terms of the IPO till now. So this is a pretty standard accumulation zone. Strong strength going up to the upside. So I think we can very quickly see above 300, maybe even 400 when you consider 2027, 2028. All right. I don't really have anything else for you. Again, like earnings, we're coming to the end of this round of earnings seasons. We'll get ready for a new one very, very soon. As we go into the end of the year, right now the big thing that everybody's waiting for is just to see what this rate cut is finally going to be when we do hit the 10th of December, so next Wednesday. Till then, I kind of expect us to just chop around a little bit. Once that rate cut does happen, then we start to consider the projections for the next upcoming meeting. So the tone and the plan that is being set forth is going to be very, very important. Also, Jerome Powell is set to step down pretty soon too. And as we go into that, and we have a new Fed chair coming into play, keep in mind the one that is expected to come in is somebody that is known for easy monetary policy, so we very likely will see rates continue to come down. But as of right now, we're just chopping around. Once we do break up above this to 685 or so, I expect us to come back to test those previous all-time highs that we've had. So, and it all aligns. Once we get these rate cuts, once we get the new Fed chair in place, I'm expecting us to continue to melt up in a sense. All right. Hope you guys enjoyed this. As always, go ahead, hit that like button for us. That way we can tell YouTube that we're actually something worth watching. They should go push us out to more people. We will be back on here on Wednesday next week. If you're ready in our Discord, obviously we have our Discord lives on the daily. I'll be back in there tomorrow to go over charts and additional STAX flow. All right. You guys have a great rest of your day. Hope you guys enjoyed it. We'll see you guys again very soon in the next one.